I think we'll look back in 5 years and see this as one of the greatest opportunities in the history of mankind. The buying opportunity today will not be available in 5 years. It will be gone. And the reason it will be gone, because I am a believer that for a percentage of your total assets, it makes sense to have some piece of this in Bitcoin. There is one asset class that stands by itself that will not be able to be controlled by anyone, and that's Bitcoin. In my case, hey, I'm buying it to give my kids, which then makes me do things very, very differently. So I have to, like, now, if I think I'm going to give it to my kids in 2050, I have to think about how to protect them in a very different way, which is one of the reasons I bought Node 40, because I was like, hey, look, this is going to be a way for my children to protect themselves against somebody.
Cardone urges young professionals to dive into the blockchain and Bitcoin industries. He emphasizes that they should focus on learning about platforms that add real value and build a strong foundation within this ecosystem. According to him, the opportunities in this field are immense, and in 10 to 15 years, individuals who establish themselves now will play a crucial role in shaping the industry's future. The speed of innovation means that this future will arrive sooner than most people think. Looking ahead to 2050, Cardone predicts significant shifts in asset values, particularly in Bitcoin. He foresees Bitcoin reaching a value of $250,000, even on a bad day, while silver might be worth only $30 per ounce. This outlook, he says, justifies putting time, effort, and resources into the blockchain and Bitcoin space. Cardone points out that if his calculations are even remotely accurate, it would be wise for investors to seriously consider this asset class. The current moment, in his view, represents a once-in-a-lifetime buying opportunity that won't last forever. Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
People coming out of school have any concern or, hey, where do I go? Go to blockchain, go into Bitcoin. Don't try to get rich overnight. Find a platform that brings value that you can understand, and make yourself a home in this industry, and you'll be able to help shape the way this industry looks in 10 or 15 years. And 10 or 15 years will be here very, very quickly, which, by the way, is my 2050. Okay, so like if I'm right, I think the silver that you saw here is going to be worth maybe $30, and the Bitcoin will be worth $250,000 on a bad day in 15 years. That, for me, is worth me putting a lot of time and attention. If that math is even close to right, it's worth a monster amount of investment in my time. I think we'll look back in 5 years and see this as one of the greatest opportunities in the history of mankind. The buying opportunity today will not be available in 5 years. It will be gone. And the reason it will be gone, because premature people like me, that's what they all say about you in the beginning. Oh, yeah. He's premature. They don't know what they're doing. These guys are all cowboys. These guys that are cowboys have made tremendous livings and changed the way whole markets are shaped, work, or structured. And so for me, this is an eventuality. It is simply about how long am I given the opportunity to buy an asset class extremely cheaply before all the big players roll in. And so, quite frankly, I can't remember a better time to be in this space, because it's becoming very, very clear now that there is one asset class that stands by itself that will not be able to be controlled by anyone, and that's Bitcoin. Ethereum may have that same type of regulatory view. I couldn't bet 1,000% that that's going to be the case in the future because I don't really understand Ethereum that well. I own some Ethereum. If I were doing it today, I would just own Bitcoin.
Yeah.
Just based on the clarity I'm being given and the moves that are being taken by all the players. So I think the regulators finally figuring out that this is not a U.S.-centric product, and it's not a U.S.-centric industry. And I like to look at Bitcoin as an industry. But if we move beyond the currency value or the money value of Bitcoin and say, hey, this is an industry, this is about digitizing planet Earth. I call this age digital Earth restructuring. So we need to educate Joe community and make sure that Joe community understands what they're doing. It does not serve anyone in this industry for investors to be confused between Bitcoin and Schmittcoin. Look, it's just confusing, right?
Yeah.
So, look, having done this many times before, once this train starts moving, there is no stopping the train. You can try to derail it. You can try to stop it. I don't really see anyone really derailing it. I do see a lot of noise. And the cool thing is everybody's talking about it.
Yeah.
So that may just be part of the journey of educating people. Bitcoin is an asset class. Now you heard Gensler say it the other day. Cryptocurrencies appear to have a sustainable pathway as an asset class. You have now 4 of the largest consulting firms in the world saying, this is an asset class. The moment McKinsey says it's an asset class to a pension guy, he has to start looking at it. He does not want to be left behind. So I'm extremely positive Bitcoin. I think we've seen our low. I'm not a bottom picker. I'm not a top picker. I don't know anybody that does that well. I am a believer that for a percentage of your total assets, it makes sense to have some piece of this in Bitcoin. It may make sense for a guy like me to have a lot more of a percentage of his net worth tied to Bitcoin. And that may be just simply down to my age, how much I've already got socked away from my kids, and safety factor. I would say that a guy like me needs to probably be more risky, not less, contrary to what everybody will say about a 60-year-old. But that's because my kids are okay. My kids are handled. So what do I need, really? And what am I trying to achieve? So like I look at every investment now. I'm sure we'll talk about some of the picks and shovels type stuff I get involved with in the industry, but unless the investment of running a company, the wear and tear on your life of running a company, managing people, the capital required, the what ifs that go wrong in businesses, and there's always a what if, something always happens. Unless it massively outperforms Bitcoin with reduced volatility, that's the way I judge every investment today. And it really makes it hard on a company because, especially depending on your thesis for what BTC may be worth in, about 2030, which is kind of the way I look at things. 2030, 2028, 5 years out. Hey, what's a 5 to 10 year holding look like? So, when you think about, I'm buying this for 5 years. Well, I don't need to look at the chart because I'm buying it for 5 years or 10. Or in my case, hey, I'm buying it to give my kids, which then makes me do things very, very differently. So I have to now, if I think I'm going to give it to my kids in 2050, I have to think about how to protect them in a very different way, which is one of the reasons I bought Node 40, because I was like, hey, look, this is going to be a way for my children to protect themselves against somebody in, that'll be 25 years? 25 years walking in the front door going, hey, all this stuff that your dad left you, we don't believe you. We don't believe that was his cost base. We don't believe, that it came from the right wallet. Prove it. And now 20 years later, 25 years later, Bitcoin has moved Who knows? 3 times a year?
He shares his personal approach to managing his Bitcoin holdings, explaining the importance of tax efficiency and maintaining proper documentation of asset ownership. As he prepares to pass on his wealth to his children, Cardone is mindful of the challenges they might face in proving ownership and navigating complex tax liabilities. This is why he acquired a company called Node 40, which specializes in helping individuals track and manage their cryptocurrency assets. His goal is to ensure that his children are equipped to handle any potential legal or tax challenges that might arise in the future.
From my wallet into an exchange, off the exchange, back into a wallet. Oh, you know what? Fidelity just offered me this awesome lending protocol deal that I've got $100 million worth of Bitcoin. I get to go borrow $20 million worth of Bitcoin or whatever. Okay, I'm going to move it to Fidelity now. Now Fidelity back to a wallet. Oh, by the way, kids, here's your trust. It made 37 moves. It looks like 37 liquidation events. It looks like there's tax payment due all over the place. My children are going to be obliterated, okay, by some analyst, some number cruncher. And without them having the full narrative of what dad did, I think all that gets I'll be dead and I won't know that I left them with a monster problem. The problem I'm trying to leave them with is so much wealth they have to become hyper responsible for making a difference in the world. That can't possibly be consistent with me then leaving them a problem to prove to whatever jurisdiction or political entity that's running the country at that time or wherever they're located, that they actually own that, and the government doesn't own a bigger piece than they deserve. So
yeah.
Look, we have 20 years of work to do. This is an industry. I mean, it's an $800 trillion asset market. And that's before you put derivatives on top of it. So then you're in the quadrillions. But $800 trillion in real estate, equities, bonds, gold, silver, etc., art. What's gold? $11 trillion. Call gold a $6 trillion market when you remove all the jewelry, which, quite frankly, all the jewelry becomes gold at $5,000. So gold can only go up so high. I mean, we walked in, I've got silver over there.
Yeah.
That's 11 boxes of silver, 600 ounces each. Took 4 days to get here. That's $150,000. I could have done that trade on Bitcoin within seconds, okay? There'd be no FedEx. There's no 100-pound bags, 100-pound boxes in there. I've got to move it around. Now, I like silver for a position, but give me silver at $23 and give me Bitcoin at 30,000. I think it's a no-brainer. I mean, that's $2,000 worth of gold bars. It's hard to move.
Cardone warns that future generations will need to be hyper-responsible in managing their wealth. The decentralized nature of Bitcoin, combined with its ability to be easily transferred across exchanges and wallets, makes it difficult for regulatory authorities to track ownership. This creates a potential headache for future generations, who may face significant tax liabilities if they are unable to provide accurate documentation of their assets. Cardone uses a personal example to illustrate this point. If he moves his Bitcoin between exchanges multiple times and his children inherit those assets, they may struggle to prove the original cost basis of the Bitcoin. Without proper records, they could face enormous tax liabilities when attempting to liquidate or transfer those assets. Please like and subscribe my channel.